In today's video, I'm going to go through my top 5 DeFi yield farms for September 2024. These are places where you can deposit your crypto and earn yield or qualify for airdrops. Welcome back to Dynamo DeFi. My name is Patrick, and just so you know, nothing in this video is financial advice. This is purely intended to be educational, and I'm going to do my best to outline all of the risks with everything I'm talking about, but you still need to do your own research. All right, now let's get into it. First, before we start, some general rules for yield farming to help keep you from getting wrecked. First off, when you are choosing which pools you want to deposit tokens into in DeFi, always make sure that they're tokens that you are comfortable having an allocation to anyways. For example, in today's video, I'm going to talk about some stablecoin pools, but I'm also going to talk about some pools that involve some up-and-coming chains like Sui. If you don't care for Sui, if you don't want to hold the token, then the pools on that chain likely don't apply to you because they require holding tokens that are associated with that. However, if it's something you want to invest in anyways, this is a way to get some extra yield on top of the returns from holding that asset. The second thing is we're going to talk about some stablecoin pools today. New stablecoins where you can earn high yield, you can qualify for some airdrops from governance tokens. Those aren't without risk, right? People make a big mistake and sometimes get wrecked because they say, oh, it's a stable coin, it's pegged to $1, there's no risk. But there's still risk. There's depeg risk, there's smart contract risk. And you know there's risk because the yields are high. Many of these cases, the yield is 15, 20% on a stable coin. And if someone went up to you on the street and said, hey, I can offer you a 20% yield, your natural response would be, this person is either scamming me or they are scamming someone else and they're gonna give me some of the returns. So why then can you get these yields in crypto? And the answer is not that these crypto projects are just so generous that they really want to pay you an above market yield. The answer is that the market in most cases is correctly assessing that these are riskier than, for example, putting your money in something like treasury bills. And so as a result, they need to pay a higher yield because otherwise people wouldn't deposit money into it. There's also the fact that most of these yields will not last forever. They're not going to last for a full year. They exist early on with incentives to bootstrap that liquidity pool, and then eventually the incentives will end and the yield will drop. Or enough people will assess that it's safe that they enter the pool, and that will also dilute the yield and drop it. All right, now that all that is out of the way, let's talk about some pools today. So the first pool that I want to talk about is Anzin Finance. Anzin is a real-world asset backed stablecoin, and specifically it's backed by institutional private credit. And this is interesting because this is an asset class that has higher APYs on its own. And the idea with Anzin then is that they are going to pass some of that yield onto you as a holder. Now, I would consider this to be an interesting financial experiment. Others have as well, such as Circle, the creator of USDC, who backs it. And it is audited, but it's still a financial experiment at the end of the day. So it's certainly not without risk. However, if you are willing to accept some of that risk, then perhaps you are interested in trying it out. And the pool that I like is the liquidity pool between USDZ and USDC on Airdrops, because you can earn around 17% APR. And not only that, but you are qualifying highly boosted rewards for their future airdrop. 20x, if you look here on the Anzin website, you get 20x of the amount you put in points for their future airdrop. And I love real world assets as a narrative. I love it as a use case of crypto. And so I think this could be an interesting governance token to acquire. Plus, it's on Base, and Base is, in my view, one of the highest potential, most bullish chains in crypto. Note that in order to use Anzin, you will need a referral code, and I'll provide one in the link down in the description of this video. Next pool, which is also a stablecoin pool. I'm going to do stablecoins first and then move on to progressively more risky things. Next one is Usual Money. So Usual Money is also a real-world asset-backed stablecoin. Their goal is to rebuild what Tether has built, massive company USDT, brings in tons of money, and their goal is to rebuild that on chain. And since they launched a couple months ago, they've accumulated over $200 million in deposits, $227 million as of the time making this video. And they've got an interesting incentives program right now where you can deposit collateral to mint USD0 and you earn these pills, and the pills go towards the future usual airdrop. So you can deposit your funds. You can also, for example, buy their USD0++, which is an on-chain treasury bill. And then you earn these pills towards a future airdrop. And again, it's RWA protocol. It's also a stablecoin protocol, which is one of the other most interesting verticals as far as real adoption of crypto. A couple caveats with usual. First off, it's on Ethereum mainnet. So although Ethereum gas is at a multi-year low recently, the fees are still going to be higher than some other chains. Also, you will need a referral code for this as well. However, you can use this one from me, AE3HR. And by the way, I don't have any special deal with them. Anyone can make a referral code once you get access to the website. All right, let's keep it moving. So the next pool is going to be GMX, and it's GMX's new V2 pools via GLV. And so the GLV launched recently, and basically it's like a basket of pools for markets on GMX. So you can see, for example, this wrapped ETH USDC pool. The composition is nearly all ETH USD with 88%, but it's got this near USD, Atom USD, some other tokens as well in small amounts. And you can deposit by depositing either ETH USDC or the GM pool from any of these other pools that they have in here. And I think this is interesting because, first off, that pool I'm talking about right now, ETH USDC, has 18.2% APY right now. 7% from the base, about 11.2% from the bonus. And then there's also a new BTC USDC pool, which is 21%. And if we look at this one, it's nearly all BTC USD with some stacks and Ordi as well. So some other exposure to the larger Bitcoin ecosystem. And what I find interesting is that the APY is pretty strong on these. Granted, it's mostly from bonus. But GMX, if you haven't followed it before, has been around for close to 3 years at this point. It's been widely tested. It's been one of the highest fee generating protocols for most of that time. It's one of the flagship protocols of Arbitrum. And so they have a stellar reputation, and they have a stellar history of keeping the protocol running and highly secure for multiple years. Note that V2 pools, of course, carry extra risk because it's new smart contracts. It's a new pool that they're deploying, so it's not necessarily going to be as risk-free or as low risk as depositing into some of their normal pools. However, I would still consider GMX to be a top-tier team and a top-tier protocol, so it would be less risky than, for example, if you saw this at a new untested protocol. So I think this is really interesting. A little more risky than just stablecoins in terms of asset risk. However, more upside because you get exposure to price going up and also higher yield in this case as well. Next up, I'm going to look at 2 yield farming opportunities from chains that are quickly growing and gaining adoption. So in this case, these pools are often going to involve holding the gas token for that chain. However, if you're interested in these anyways, could be a good way to add some extra yield. And the chains that I'm going to look at today are Sui and Sei. Might be confusing because they are only one letter apart, but Sui and Sei, interestingly enough, are 2 of the fastest growing DeFi chains. Sui has been getting a lot of attention recently, in part because price has been going up, but even looking at their deposits in DeFi protocols in terms of their own token, we can see that it recently was at an all-time high and has been undertaking a long-term growth pattern. Sei is even more crazy. It's been just completely blowing up this summer since they launched their V2, up from around $47 million in deposits in June to $178 million now. And if you look at decentralized exchanges on their network, you can see that volumes on there have also been surging. So today I'm going to talk about some opportunities to yield farm on these 2 networks. Now, if you go to DeFi Llama, you can see all the DeFi projects on here for yourself. The one that I'm going to focus on is Cetus AMM. Cetus AMM has had a good year, has been growing pretty quickly. It's a liquidity hub on both Aptos and Sui. And if you go to the farms over here on Sui, then you'll find that there are some pretty good APR farms that only give you exposure to Sui. So again, if you want to hold Sui, then you can have a liquid staking token for Sui, which is going to earn yield on its own. And then you can pair that with Sui itself for people who want to swap between the two. And basically all of these pools earn, well, 100% of them, all three, earn between 12 and 13% right now. And you can see that they have some Sui incentives here as well to boost it. So if you're holding Sui, you can earn yield from this. And then again, keep in mind these tokens are also yield bearing assets as well. Finally, that brings us to Sei. Now Sei is interesting because it's EVM compatible, it's high throughput, it's built on Cosmos. And like I mentioned before, it is one of the fastest growing chains in terms of adoption over the past few months. Some people might remember it from earlier this year when we talked about it on this channel. Back then, the TVL was actually very low, but recently, although the price isn't as high as it was then, the TVL and DEX volume are significantly higher. And one thing that's also interesting about Sei is that a lot of these top protocols on here don't yet have tokens. So we're going to talk about some cool strategies here today. One is Silo Stake. Silo Stake is the leading liquid staking platform on Sei. You can stake your Sei on here and earn iSei or receive iSei in return. And so you're going to receive APR on that around 4.1% plus a boost right now. However, they don't have a points program yet, but they also don't have a token, and they've implied that they're going to have a points program launching soon. So although I think airdrops have become heavily overfarmed over the past 9 months, smaller chains like Sei tend to be a better opportunity because fewer people are looking at them. And if people are testing it out, they tend to not have as sophisticated bot farming networks where they have hundreds of thousands of wallets. It tends to be a little more edge. You also have the benefit that the chain is growing. So if you start farming it around here and then it grows, or you start farming it here and then it doubles or triples again, then you may have an outsized share of rewards compared to people who got in at the last second. So you can stake on Silo Stake, and then even better, you can go over to Yay Finance, the leading lending protocol on Sei, and you can actually deposit your iSei on here. You earn extra yield, and then on top of that, you are qualifying for the Yay airdrop because they also have a points program going on. So you can double dip here, probably qualify for a future Silo airdrop. Again, their points program isn't live yet. And you can qualify for a future Yay Finance airdrop. And so you are, by doing that, qualifying for airdrops from the two leading DeFi protocols on the Sei network. If you want to learn about more farms like this more frequently, then every week I send out a farm of the week in my newsletter at dynamodefi.substack.com. This is from the free newsletter, so all you have to do is sign up and you will get it in your inbox. And for more videos like this one, be sure to like and subscribe. Until next time, this is Dynamo DeFi.